Hey. Happy Monday. Welcome back to another episode of Go FUD Yourself. Kiara is on a plane today to Australia. So today/tomorrow. I think it's like a 18-hour flight or some nonsense.
Like 79 hours.
Yeah. She's flying for like a month. So today we have Christine here to join us. How you doing?
I'm very well. How are you? Happy Monday.
Happy Monday. It is a happy Monday for many reasons. And specifically Bitcoin. We're going to talk a lot about Bitcoin today. The price has surged. Why? Do we care? Do we think, or what are the analysts and pundits saying? How do we feel about the SEC's approval on spot ETFs, etc.? We're going to talk a little bit about the SEC being in some trouble and what that might look like. They were slammed by a judge in federal court just recently. And what else? Oh, Blast. We're going to talk a little bit about Blast if we have enough time, which is a new layer 2 that hits 660 million. We got a lot of stuff to talk about. We're also a live show, Monday to Friday, 12:30 p.m. Eastern. But before we play our little video and get going, Christine, do you want to do a little blurb on Tashi?
Oh, that's interesting. Yep, I can.
Just kidding. On the spot.
Yeah, really on the spot. Yep, Tashi is one of the projects that I'm working on. It is a borrowland in the Evmos ecosystem. Really currently just getting started. So we launched quite a while ago, a couple months ago, but we just got our bridges figured out. So it's really exciting. We're working with Wormhole. Wormhole's kind of everywhere right now, and it's a big deal. And so we just really are starting to make waves in our little ecosystem we got going on over there. So Tashi.finance, check it out.
Come check it out. Tashi.finance, all the social links and all that stuff. And again, normally I'm wearing Tashi merch at least once a week. So thank you for the merch. Quick shout out to our friends at Krypton today. They are today's merch sponsor. And let's just go. I always want to dance around during this, get a little groove on. All right. So unless you were living under a rock or chasing kids around at sports, you might not have seen this, but everybody else probably saw that Bitcoin went bananas over the weekend. And I mean, it's the first time that it's broken 40K since April 22. So that's pretty exciting. Has this been blowing up your crypto Twitter? Like, do you pay attention to the price of Bitcoin at all? Or
I do pay attention to the price of Bitcoin, but you know how I see it, how it's represented in my world is all these other little coins are starting to run. And I'm like, that Bitcoin's kind of the catalyst for everything else, the okay for everything else to get moving, which is really exciting. So yeah, but Bitcoin in itself, yep, it's all over the place. But I like it because it's just usually like posts of a number, like a whoa,
Yeah, I mean, obviously, Bitcoin had a tough couple of years as well. Not obviously but not as violent, I guess, as some of the other drops in value of some other assets in the space. But Bitcoin again is usually kind of the leading indicator of what's to come. So Bitcoin starts going down, generally speaking, you start to see everything else follow. The proverbial coupling where everything else seems essentially tied to Bitcoin. Do you think we're going to see kind of a continued waterfall effect like we have been? I mean, as Bitcoin goes up, my theory has always been, certain people that, I mean, even if you got in at the beginning of this year, you're up 140% on the year. I mean, some of those people made pretty good cash. And if you're a large institution and you make 140% returns in 1 year, you've covered your required returns for like the next 10 to stay in industry average in return. So, I mean, a lot of these people are taking profits off the table, institutions, enterprises taking profits off the table and reinvesting in, smaller cap, greater opportunities. Do you think that's going to continue here, or is it kind of a bit of a waiting game, Christine, until we have more clarity on the ETFs?
I know it's going up. It's going to go up. People will continue to take their profits. When you say 140%, I am so jaded because, I mean, that is an amazing number. And there is nothing that I'm in that I would be excited about 140% return on.
I think the difference is like just liquidity, right?
Yeah,
So
no,
I mean, go
to
ahead.
be fair, though, I think it is much more significant than any of the little like projects that I'm in going up, 1,000% or whatever. So,
Well, it's that, and then I mean, like, it's important to think if we keep talking about enterprise adoption and institutional adoption. I mean, if these people are going to participate in a space, we're talking multiple hundreds of millions of dollars of exposure, and I mean, there's not too many assets that you could place $100 million buy orders and actually not crush your own purchase price.
right.
Or
So my question is, like, where
exponentially
does that
increase.
level out? Once everybody is allowed to participate, like, where does it level out? Then there will be like a set value.
Yeah, I mean, I wish there was like a number. I'm sure some researcher somewhere has come up with like once a market gets to this much liquidity, then we think it's good. But I'm not sure if there's like a perfect silver bullet answer for that. I think Ethereum's starting to get there too. We're seeing more discussion and applications for ETFs and different things. I think the general consensus is there's enough support across TradFi, DeFi, and centralized exchanges for ETH too. So, I mean, we'll see. I'm quite bullish on this because I think this really is the next catalyst. And we've been talking about this for years, of course, but the next halving, the Bitcoin ETF, that's kind of a convergence of a few fairly notable things all at once. We're also talking about the Fed tapering rates now, potentially, or reducing rates potentially in the next little bit. So that will add some rocket fuel, so to speak, to the general economy and general investor sentiment. So we'll have to see. Pretty interesting. Any thoughts on Bitcoin skyrocketing before we move on? Oh, I guess we can talk.
Leave it. We can't really leave it yet. This is a big conversation over the weekend. It's like the only thing.
Yeah. Well, I mean, we've got a few other articles. This one, the headline is Bitcoin rockets past 40K, eyes set on 42K as bulls gain momentum. Part of kind of what we want to remind people here is no market ever goes straight up. So you'll see a lot of these analysts that'll come out and be like, oh, Bitcoin broke 40. It's going to go straight up to 42.
Yeah, but it is at 41,673 right now.
Now, yeah.
I know, but even like that gives you some sort of understanding of how this momentum is going at this current moment. I agree with you. It's not going to go straight up. Some people it's going to dip. They're going to panic. They're going to sell, like whatever.
This is going to prove me, this particular case is going to prove me wrong.
Yeah.
It's probably just going to go right past 42 and not even slow down. But
so in all of these articles that we're citing, like the points to watch out for there, we passed them all except 42 so far. So we're doing pretty good.
Yeah. Final word of caution on this one, I guess, is it's driven almost entirely by speculation. So it's worth taking this growth. Sorry?
All of this is kind of driven by speculation, though.
Well, the whole space is, of course. Yeah. I mean, we're trying to get past that, though. That's the whole argument, is that we're trying to build enough scalable, meaningful value into these assets so that they aren't purely speculative momentum assets, right?
But at least the speculation is tied to like actual things that might be coming.
Yeah, of course. Usually it is. I mean, usually speculation is based on what somebody promises is going to happen.
Yeah.
In this particular case, I think the probabilities are pretty high, I think, that an ETF is going to be approved relatively soon. So I think this time, maybe the speculation is on par. But we got to remember, if the problem with these kind of bubbles, speculative bubbles, is if the thing doesn't happen, they burst. And usually it's more violent and it goes down further than where it started. So just got to be careful. Like this isn't free money. It's not, mortgage your house, put it in Bitcoin because Bitcoin started a bit of a run. Just be careful. You don't have to make all your gains. You're not going to make all your gains in one day. The idea is just to stay in the market long enough. So don't put everything into Bitcoin tomorrow.
And if you do have your gains in one day, then remember to take it out of the market.
Take it out. There you go. That's number one Christine strategy. Make sure to take your money out of the market also. Getting it in there is, we've all got that part covered.
Yeah.
It's getting it out that's usually a challenge. Anyways, okay, so there's some technical analysis, which anybody that's watched the show knows that I don't love because it's super subjective, and it's all dependent on where you put the lines on the chart yourself. So I mean, whatever. I'm not a big fan of TA, but the TA people are all generally bullish. The moving averages have done the beautiful cross from the 200-day and the 5 or 50-day cross. So everybody's all fired up that that's it. Sometimes these are self-fulfilling, but I really struggle with these, like, oh, we saw some lines on a chart, so that means this will happen.
Like zodiac stars.
Yeah.
Mercury is no longer in retrograde, which means Bitcoin can fly.
Yeah. I mean, all of this stuff maybe has an impact. I don't know. Anyways, so there's a lot of analysts that are, and investors and everybody, and again, kind of speculating that the Bitcoin ETF is going to be approved. If that's the case, obviously it will continue. It will continue to go up, generally speaking. If for some reason, though, it's not approved, again, we got to be careful. Wear your seatbelt and hold on tight, because it's going to get ugly. So we'll have to see. I mean, there's been some interesting kind of pundits opining on this too over the last little bit. So, I mean, a few of the Ripple team people, lawyers, have made some fairly public criticisms of the SEC of late. Probably not really off base. Bloomberg, one of their analysts, suggests that there's a pretty strong window of BTC spot ETF approval between January 5th and 10th. That seems awfully specific for me. So maybe they know something that the rest of us don't. I don't know. Somewhere else I saw that there was a bet somewhere. Was it a bet? Give me one sec. I want to make sure I don't misstate this. I could have swore I read somewhere that someone suggested that there was a specific date in January that there's there's a 90% probability that an ETF will be approved by
January 10th, 2024.
Yeah, January. Yeah, okay. There it is. January 10th, 2024. 90% probability.
It's going to be a Merry Christmas. 90% by January 10th.
I just, these are like insanely specific dates and like pretty confident
statements,
claims as predictions, I guess. I don't know. We'll have to see. We'll have to see what happens with this whole thing. Obviously, I'm bullish. I think there's 13 applications in right now. Some big names, BlackRock, Grayscale, et cetera, et cetera. It's just a matter of time. I think we've put in our efforts, and now it's time to start to harvest. Anyways, okay. Franklin Templeton also, who I can't remember her name off the top of my head. Jenny Johnson is the CEO of Franklin Templeton. Actually met her at Medici this last year. Really cool. Very positive on crypto and blockchain, both for the technology enabling many of financial processes that are somewhat outdated technically to come into current. So pretty excited, pretty positive, pretty supportive of the space. And of course, they're bullish. They feel like that the space is about to turn around. And let me find the actual headline. More or less, they have unveiled their new blockchain strategy, their Bitcoin ETF plans, and their NFT foray. So I'll just read a little bit from the article. Hopefully it'll give you a bit of an idea. But it says, Franklin Templeton, a global financial giant managing over 1.3 trillion, has been at the forefront of blockchain exploration. In an interview with Jenny Johnson, the CEO, she emphasizes the distinction between Bitcoin and blockchain. We're going to put a pin in that and come back to that, highlighting blockchain's role in democratizing and unlocking non-traditional asset classes. The firm has also filed for a Bitcoin ETF, thinking that it's a long-term strategy to reduce transaction friction, enhance efficiency, and facilitate the securitization of traditionally complex assets. If you want to check the article, our producers will put it underneath the video as a link to it. Do you think this matters, Christine? Like,
I think this is exactly what we're looking for, is like giant players like this. You know, we hear about the BlackRocks, the whatever, but all of them. We need all of them to get on board, and they are getting on board because they want to make the money too. They want to have access to what everybody else has access to, and they are going to be the ones who move the needle. It's not going to be little people. We have to develop all this stuff and get it ready. and then they will take it over in their world and be able to utilize it, which is going to push all of us forward. So yes, I think this is why we're bullish. We are not bullish because of random sentiment, and we said that the 3-year cycle's over and whatever. We're bullish because more and more and more these kind of people are demanding the ability to participate.
Right.
And when I say demanding, it's in a very kind way. But this coupled with now all these, you know, how the SEC has been pushing back and pushing back and pushing back, all these attacks that are coming against them, saying that they're unjust in what they're doing, they can't, you know, they have no footing. Every time they get pushed back, it is a win, right? I think this is extremely important. And when you said put a pin on it to differentiate between Bitcoin and blockchain, I think that's extremely important because that's what we're working towards. Bitcoin, yes, is kind of our, you know, guiding star, but it's the technology. It's blockchain technology that is what we're after. The ability to transact faster, cheaper, smarter, like to be able to see everything. That's what we're moving towards, right? That's what we want.
I mean, Franklin Templeton has also really kind of pushed the boundaries, I think, in indirectly supporting us in moving regulatory discussions along. And the reason I say that is there's quite a few things that Franklin Templeton has done that most people thought were maybe not possible. They tokenized a money market fund and put it on a public blockchain. And until like 10 minutes ago, no one thought that that was going to be allowed, that any traditional financial institution was going to be able to meaningfully put their assets on a public blockchain. And so Franklin Templeton did that. They've been investing, both Jenny Johnson and as an individual and Franklin Templeton as a company, investing in some kind of critical core DeFi, SushiSwap, Uniswap, Ethereum, etc. They're talking about investing in some blue chip NFTs for financial returns. All in all, I think this is really good. The point I wanted to put a pin on and make sure we had a minute to talk about is where she says that in the intro of that article that Bitcoin and blockchain often are conflated. And I talk about this a lot. I think this is one of the biggest injustices in the space currently, is that we all, for some reason, I believe, are indexing towards the wrong problem. And the problem that most people think is we need to get market caps up. We need to get that, keep building value and utility into these tokens, more utility, more utility, more utility. Although, yes, that's important. That's not the only ingredient for the technology to survive. And I would argue it's probably of much lesser importance than the underlying tech itself. What does blockchain actually do? What are the features and benefits of the technology? Forget the tokens that we've created as financial assets. But the technology itself is far more advanced than most people give the space credit for. And the reason I'm so kind of emotionally committed to this is in 2016 and 17, we accelerated blockchain tech into the US government, and with a different entity and different partners. But anyways, we did that. And at the time, I was overwhelmed with how advanced some of this blockchain tech was already. It just wasn't public. It was all private, supply chain management, identity management stuff. Different things to do with Space Force and Department of Defense. And there's a whole bunch of things. It wasn't Space Force at the time. But anyways, all of this to say, I think even back then, there was a lot of exciting technology, fairly advanced blockchain technology already. What Jenny talks about often is the technology itself is really critical for, kind of furthering finance, really globally. But often the discussion isn't around the technology, it's around the asset class of cryptocurrencies. Bitcoin, in her case, is the one that a lot of her clients and high net worth people talk about. But you could apply that to anything. Do you, obviously, Christine, you're of the opinion that these types of things are pretty important. Do you find that in a lot of your conversations with your users and clients and community, that they are also conflating these two things, or is it something that you think the kind of groundswell in the space is focused on the tech and what are your thoughts on this, I guess?
It depends on who I'm talking to, I guess, and how long they've been around. There's a lot of people, I think because I'm in lending, I think there's a lot of people who are a little less concerned about the technology itself and more concerned about the token, which is what it is. I mean, it's the space that I happen to be in. What they don't understand is all of the working parts behind the scenes, all of our partnerships, all of our everything that it takes to make it happen. Um, and so we definitely have a good understanding of, you know, what is really at stake. What are we talking about? Like, what are we capable of? And, I think a lot of the time people don't consider that when they're getting in. But I think that because it's still such a small community, they're going to end up learning really fast from utilizing different protocols, right? Like you'll see
Yeah.
things that work, things that don't. You'll see things that move forward and things that get left behind, and that's all for a reason, right? It's. I think it comes to pretty quickly. It just so happens that when you ask me specifically about this specific protocol and ecosystem that I'm in right now, I think
Right.
there is a lot of lack of care almost about how it all works together.
About the
They just
proper
want it
utility.
all, you know,
And it's something as a space, I think that
it's really hard to talk about that way because on a bigger scale, I think more people are like you and I who understand the deep rooted value of being on chain, right?
right. And what the tech can actually do. I mean, I think, yeah, it's just one of those things. Like we talk so much about building this utility into the token, but and we don't think about new ways to imagine value capture. Like we're all just like, oh, let's find other gimmicks to, But
Yeah.
in reality, right now, almost all of the volumes that we're seeing anywhere are quite opportunistic. There's very few, and I actually got into an argument arguing the opposite of what I'm about to say, but I was proven incorrect. So now I've changed my opinion. But I mean,
That's a sign of a smart person, let me tell you.
yeah, I don't know. I just think, yeah, there's so much focus on these assets being speculative. I'm just going to leave it. I'm going to leave it at that. There's too much focus on these assets being speculative. There's very, very few, and this is what I was about to say. There's very, very few examples of pure blockchain technology utility that isn't focusing heavily on the investability of the technology. I think those two things also, they need to go hand in hand. It needs to be investable and it needs to be a disruptive technology. But I just don't think
these blockchain wars that we see between ecosystems where you're a maxi of something. Well, everybody's trying to just win win the game, but really, like, why do they matter? What are they doing differently? But the good thing about that is it forces people to come up with new ideas. Like, what can we do better? What can we do better? What can we do better? And so I myself am not like I'm maxi on any specific thing. I like to be a part of lots of communities for that reason, see what they're offering, and I'm learning new stuff every single day because of it. But it is interesting that, and you're right, like I think as a whole, what people are focused on is just how to win right now, what the price is right now, where the people are right now.
Yeah, I mean, to build on that, we've kind of done it to ourselves too, right? Yeah. Like as a space, a partner of ours and a guest on the show, he'll be on this week, Patrick, wrote a Substack on barriers to entry and what that does to innovation. And I think that's important here too. So we talk a lot about how easy it is to innovate in blockchain in a sense, because so much is on chain, it's open source, it's very collaborative, building on technologies of others.
Well, that's what I was going to say. It's really easy to, if you have one better idea, you fork it and implement your idea and you're good.
The challenge with that is the barrier is too low. So it's too easy to fork things and to try to make a financial opportunity out of it as opposed to meaningfully iterating on the technology. And so I think when the barriers to entry are as low as they currently are, as in pretty much anybody can start a protocol in crypto, there's like no registration requirements, you could be anonymous. When the requirements are as low as they are, we see a lot of this proliferation of forks. And
yeah, but what you're seeing now, just take a step back from that. Sorry to interrupt you, but to take a step back from that, you are seeing certain protocols and chains trying to license out their tech for that reason.
Yeah, I mean, and we're going to need a new IP, a new way to manage IP in this kind of new world. How do you control your IP? I mean, Uniswap has experimented a little bit with that. With V3, they had a 1-year closed license where you couldn't actually use their technology. Then they open sourced it. And we saw everybody and their dog forking Uni V3 like April 1st when the license was available. So I think as a space, we've done it to ourselves. I think as we get a little bit more regulation, I think we're going to bring that barrier to entry up a bit, hopefully not too much. We're going to bring it up a bit so that we don't see quite as many of these random efforts to just continue forking and doing no updates. See, that's the other problem is, I mean, we've always taken the approach of open source. The benefit of open source is you can take what someone else has already done, tested and modified and optimized, and then you can add to it. That's kind of, it's like the collective good in a sense. And so every time that we've ever looked at forking something, it's generally because we think there's a slightly better way to do it, but you don't need to throw the baby out with the bathwater. Having said that, I think there's a lot of straight forks everywhere. Like you see them all over, especially, well, lending is one of them. DEXs are like the most obvious, I think, version of that. There's a million curve forks that keep getting exploited.
So what is the alternative to, do you think it's wrong to fork a DEX into a new ecosystem without making some major changes if what's there is already working? Like if you have one that works and you know is doing well, and ecosystem needs one, is that still wrong to fork it over there?
Yeah, so I don't think it's necessarily wrong. I just think, again, it's focusing on the wrong thing. Mm-hmm. So if you're launching a new ecosystem and your approach to becoming successful is to convince all the other protocols that exist in the other ecosystems to launch in your ecosystem, additionally, what is your actual value proposition? Like, what are you bringing to the space? Like, why? And the reason I say this is from a protocol's perspective, because we're asked to launch into pretty much every ecosystem that exists. And, just fork your protocol, launch it here. Why? Like, to what end? Is there better ways to do that? Is the future going to be where there's a Benki on 10 different blockchains? No. The future is going to be where people don't give a shit what blockchain they're on. They can just use Benki. But it doesn't mean we have to have a deployment and 10 separate communities and 10 separate tokens and 10 separate protocols, all with 10 separate vendors. All of that doesn't make sense. So I think, to your point, sometimes you need those kind of fundamental building blocks. You need a DEX early. You need a borrow lend early. You need a stable swap early. You need a bridge. You need some of these things early on. And so, yes, some of them will be forked. Some of them will be somewhat opportunistic. But I think then we see way too much focus on that, other than the first. There's a couple primitives, 2 or 3, that you just need. You need to start building liquidity. Other DEXs will come. Other borrow lends will come. Other structured products will come. But where I get concerned is when you see very few novel technologies being built.
Or not, yeah.
Or none at all, right? Like you see tons of ecosystems and their only business development goal is to try to bring protocols from other ecosystems. If your only goal is to try to convince the protocol from the blockchain next to you to come to your chain instead, then A, that's probably a losing approach, in my opinion. But B, you better have a damn good value proposition. Why would I launch on your EVM?
Right.
Like, what does your EVM do so much better, other than it's new and sexy for a minute? Right. So, anyways, just something to think about if you're looking at building in the space. I mean, forking is great. It is probably smart in a lot of ways. At least starting with a fork, because if you pick the right platform to fork, then at least you've got some battle testing in the base technology. But hopefully you've got a meaningful angle of iteration, because I mean, otherwise you're not really doing the space and service. Anyways, okay, let's move on from that. Let's talk about the SEC getting in trouble a little bit. Did you hear about this?
I did.
All right. So essentially, a federal judge, Robert Shelby, has raised serious concerns about the U.S. Securities and Exchange Commission attorneys allegedly providing false and misleading evidence to obtain a temporary restraining order. The judge has demanded that the SEC justify its actions, suspecting that conflicting stories were presented to freeze the assets of Digital Licensing and Debt Box in July 23. The accusation involves the SEC claiming that this debt box offered an unregistered security. Essentially, all of this to say that the judge has deemed that the SEC was trying to not use above board approaches to getting a restraining order against one of their clients. That's essentially what this all comes down to. But this is the first of a few things, or not the first of a few, but one of a few things that the SEC has been slammed with lately, and it's starting to look a little not awesome for the SEC in most of these court cases. They're losing court cases. The judge in the Ripple case criticized pretty seriously and directly the SEC. Now this one, what are your thoughts on this? Do you think we've lost our way?
Who's we? What team are we on right now?
I think maybe just we as society in general, like the fact that the regulators are being accused of this type of unethical behavior, to me seems
absolutely. I think we've lost our way. That's why we're here. That's why we're here, is because as a whole, as a group, as a country, as a global whatever, we've lost our control, and we've been hyper controlled by these people that are supposed to be protecting us. And I do believe in some sort of regulation. I do believe in some sort of somebody has to set kind of the stage of what's okay and what's okay, because as humans, we like to get in trouble. So it's kind of nice to have a rule here and there to keep us in order, but that's not what's happening. Now it's about their money, their experience, their rules, what's good for. We've made our rule makers and our governments so big that they no longer work for us or with us. They work for and with themselves. And so I believe that's why this, we're here and why this started. And so all these little wins, all these little, and I don't mean it in a malicious way. I mean it in a they can get bent. They should be. It's brave of people, and that's a stupid word, but also it is brave of people to start to point them out and say, what are you doing? This is not how this is supposed to go. You can't just make stuff up to, for no reason, deny things, get people in trouble. Because at the end of the day, all those funds were put on hold, and it's users that are affected. It's not so much the big companies, right? Okay, maybe, but it's users' funds. You can't, it's really bad. I think it's awesome that they're starting to call this stuff out. And I think that, you were talking earlier about what happens if this fails on, what is it, January 10th? Was it January 10th? It's supposed to be approved by 90%, and to watch the dip and all of that. But I think there's going to be major, major backlash.
If it's not approved relatively soon, I think there's going to be some problems, which is why this speculation is right. Going.
Because all these things keep happening where they're like, what? This isn't right. This isn't correct. There's no reason for this. And with all these little things adding up, as they continue to deny the bigger things, it makes them harder for them to justify that.
Yeah, there's some really good lawyering going on here, for which I am grateful.
Yeah.
But Ripple, to add more to the list of things that I'm thankful for with respect to Ripple of late, it's their legal teams and executive teams that are perpetuating these news cycles around the SEC. So this debt box or whatever was a $50 million unregistered security sale. And XRP and team have been all over it. They've been opining and commenting and publishing articles and all this stuff. So I think it's great because they're bringing more eyeballs to the deceptive and kind of erratic activities of the SEC here. And it's hard. You can't ignore it forever because they're getting meaningful news coverage.
What people don't understand is that takes money. It takes money to expose people. It takes money to put yourself out on a limb, and somebody has to do it. And without these kind of, we can't trust that it'll come out on its own, right? We can't trust that it'll be covered in, just because we think it should be covered. We need these big, ripples of the world to come in and have our back. And I think you're right. I don't think that there's a big understanding of that's why we're seeing these things, from the outside world. I think that people don't realize how much work it actually takes and how much behind the scenes money there is going on just to get these things into the light for us.
Yeah. I mean, I guess time will tell, but thank you, Ripple. And I mean, there's some people that have made outsized gains in this space. Ripple, Brad, and team are some of them. I mean, Ripple's made quite a few billionaires. It's nice to see them using that money for something that benefits the space as a whole. The polar opposite to what we saw FTX do.
Mm-hmm.
We're seeing XRP do literally the opposite.
Coinbase, side.
Yeah. Coinbase has also done a lot for the space. They've spent a lot of money fighting these cases and have done a lot publicly to advance our interests as an ecosystem. Anyways, okay, one final thing just to end maybe on a slightly good note, but worth people taking a look at if you're involved in this. So essentially, Blast, an L2, a new L2 that's being built by the guy that Pac-Man is his name, of course, an anonymous founder or pseudo-anonymous founder again. This is the guy that did the Blur NFT marketplace. So obviously made a pile of money off of Blur. There's a lot of arguments that Blur was kind of Ponzi-nomics, but a ton of people made a ton of cash on Blur. So now Paradigm was one of the core investors and has actually acknowledged that this might be another Ponzi, but they don't really know. Anyway, 600 million TVL inside of a week, I think. Was it in the first week?
Yeah, 1 week.
So, I mean, I don't really know a whole heck of a lot about it, but apparently they're hiring a bunch of senior blockchain developers now, even though there's a bunch of skepticism, the allegations of the Ponzi, they're being kind of mocked a little bit on social media. Blast itself holds a ton of ETH, staked ETH, and stables.
They have a ton of money.
They got a whole bunch of cash, like 200,000 ETH and 75,000 ST ETH. So they're accumulating all of these assets. I don't know, it's happening really quick. So I'm sure there's a few people that are going to make crazy money on this, but make sure you do your research here. If this is something that you're participating in, thinking of participating in, you're seeing all the influencers opining on this. By the time that you see every influencer on crypto Twitter talking about something, it's probably too late.
Does that mean it's not a good time to get into Bitcoin anymore? Because we've
not financial advice. That's different. When you talk about projects that you've never heard of, when you see influencers talking about it like it's the next Bitcoin.
No, I know, I'm just giving you a hard time. That being said, though, I think this is, I don't know, I've seen a lot of like really lame meme projects that are nothing turn into amazing things. Only because they were like, well, this caught on. Now we have money to do something. I am not condoning this project, this L2, this whatever, but you never know, right? It's one of those things.
I mean,
they have the stables and the finances right now to do something cool. Let's see what they do.
Let's hope they actually do something cool instead of just squander all that money away. Yep. The reason I say let's end on a good note is regardless of what we think about this particular project, the fact that they got 600 million in TVL inside of a week means that the bears have kind of quit hibernating possibly and are now morphing into bulls, I think, because we're just seeing a lot more DeFi deployments. We're seeing a lot more capital coming off the sidelines, filling out these L2s, Optimism, Arbitrum, Base, Polygon, whatever this one's called, Blast. What I don't know is, does Blast do anything meaningfully innovative in their technology? I don't know anything about it, to be honest. This is the first time I'd even heard about it, which is kind of embarrassing considering I read news every day. Anyways, all of that to say, maybe another example or symptom of the tides of change. Maybe. We'll see. We'll see what happens at the end of this year, rounding out December and into next. That's it. That's all we got time for today, Christine. We're out of time. It's been fun as always. Thank you very much for joining. Quick reminder to everybody, we're a live show Monday to Friday. Like, share, subscribe, hit the bell, all that other shit so that we can get the word out there and keep dispelling FUD and hopefully dampening people's FOMO. And with that, today I say to you, Christine, go FUD yourself.
Thanks for having me.
I almost called you Kara. Oof. Okay, bye.